With the huge volatility in bond yields recently, market uncertainty grows again, and the September real estate data in Toronto is here to confirm it. The data shows that we are clearly now in a strong buyer's market. So, what could this imply for Toronto's real estate scene? Well, stick around and we'll dive into our latest analysis. Let's take a look at the latest September TRREB data. As you can see, listings saw a huge spike up by almost 50% and sales came down by around 7%. And we'll get a better picture when we stack sales to new listings, where a higher number means more of a seller's market and a lower number means the market favors buyers more. So what we can see here is that the sales to new listings ratio has dipped well below average levels into clear buyer's market territory. And in fact, the sales to new listings ratio hasn't been this low since the global financial crisis, which definitely sets off alarms. On the other hand, prices haven't budged much yet. We saw prices come up in the spring and drop a bit over the summer, but for the most part, sellers are still trying to hold out for those higher prices we witnessed from earlier this year. So, as a result, prices are still around 10 to 15% higher than the lows set back between July of 2022 to January of this year. We do think there are some pretty strong supports set between that time, but it is still lower than our current property values. So given the current market dynamics and just higher interest rates in general, we do expect more room for average prices to drop, likely settling at these strong support levels, which is going to be 10 to 15% lower than today's prices. Now let's dive into rates a bit more, and bond yields have been a hot topic in the news lately. Now, this is very important for real estate investors because fixed mortgage rates are based off of bond yields, and the huge swings in the bond yields do reflect how shaky the overall economic sentiments are as well. Now, the market's uncertainty has actually shifted towards the longer term, with bond yields experiencing some pretty drastic fluctuations. Now, over the past couple of weeks, 5-year Canada bond yields surged to 16-year highs, but then more recently, we've witnessed a decline in those yields after the IMF downgraded global forecast for 2024. Interestingly, short-term rates are stabilizing, and in fact, the U.S. Federal Reserve even hinted that they might have reached peak overnight rates. And so, even though uncertainty is definitely still lingering, things are slowly getting clear. The fact is that the level of discounts in real estate is often linked to the level of economic uncertainty. So once we do see more signs of rates holding stable, which is likely given the signs of stability in shorter term rates more recently, more confidence will return to the real estate market, and these real estate discounts that we are seeing won't be as steep later on. However, due to the persistent market uncertainty in the bond yields, it is looking a lot more likely to get big purchase discounts on real estate lately. Just note that it's not everywhere. Turnkey properties and starter homes at lower purchase prices are always going to have more demand, which means that they do track average prices better. But what's fascinating is that we are seeing massive discounts, well over 15% on individual transactions, especially in those involving high value properties or those needing substantial renovations. Now, take a look at this example, which ended up being a slam dunk deal for a client recently. This property was listed for around $1 million and sat on the market for over 2 months over the summer because it needed a lot of work, at least $200,000. Now, even at the ask price, you are looking at an impressive $2,000 of positive cash flow. But the $200,000 renovation budget ended up scaring most buyers away. In the end, our clients bought this property for under $800,000, which is an impressive 22% discount off of the list price. Now, with 3 units in it, this ends up generating a massive $3,300 of positive cash flow each month. So as you can see, the rental numbers do work out really well, even at today's 6.3% interest rate. And even if the overall market does come down another 15%, but nobody really knows if that's actually going to happen, something like this ends up being a better deal compared to that or even the lows that were set throughout half of last year. Now, projects like this definitely do need a lot of work and are suited more so for experienced real estate investors. But we on our team are happy to walk you through this and other options as well, because everyone's real estate experience and risk appetite is different. Either way, this is an ideal market to get started investing in real estate. In today's buyer's market, you can take your time to learn the ropes, put in conditional offers so you don't get pressured into buying, and having good bargaining power to negotiate the price so that you can get the best deal possible. And if you want help with this, just reach out to our team. We specialize in investing in freeholds in Toronto, and we're more than happy to chat with you about this. Just take the first step to book a discovery call with us by heading to this link right here. Finally, if you found this video helpful, show us your support by giving this video a thumbs up and hitting that subscribe button to stay updated with our content. Our channel covers a wide variety of real estate investing topics in Toronto, from market trends to housing policies, interest rates, and investing strategies. We're here to make your real estate investing journey easier for you by offering services like planning, analysis, buying and selling, renovations, leasing, and property management. For more information, visit our website or find us on social media. Thanks so much for watching, and I'll see you in the next video. Bye.